So she spanked Donald Trump with the Forbes magazine.
That's what I was trying to say. I'm not sure if it was a Trump magazine. There are some debates to that, but let's leave it at that. Anyway, the debate, the campaign is ongoing. This is the level. This is what we're going to get used to. Going to be hearing even more of. Still, Trump is looking relatively solid in most polls. Biden has made up some ground since the State of the Union, but Trump's still looking relatively solid. And actually, if I had to bet, I think the Biden campaign is more worried about this hush money trial than the Trump campaign, actually.
And this is the only trial that we'll see ahead of the election, right?
Absolutely.
No risk of the others
not really
being put forward.
No. At least not concluded before the election. No. So we will potentially have a president going in with...
You're listening to Macro Sunday, hosted by Andreas Steno. Hi, everyone, and welcome to the Macro Sunday podcast. I'm Andreas Steno, suffering from a sore throat, as you can hear, after a dramatic night at Santiago Bernabeu this week for the Champions League match between Real Madrid and Bayern Munich. But the end result was perfect, and I'll leave it at that for those of you listening in from Germany. As per usual, I'm joined by you, Mikkel Rosenvold, my friend, but also partner here at the company Steno Research, head of geopolitics. Welcome to you.
Thanks a lot.
Quite the show we have today.
Absolutely. We have a lot of ground to cover.
Yeah.
We'll be talking a lot about the U.S. economy today, trends in the U.S. dollar, trends in the U.S. housing markets, trends, a little bit of preview for the U.S. CPI next week, and then talk about some movements in our portfolio as well. Maybe a little bit of geopolitics as well. You never know. Should we start, Andreas, with maybe we should just start by telling everyone that, of course, you can always read all our content at stenoresearch.com. We provide you with a lot of weekly articles. We have the morning articles, which we don't mention enough in here. They're really, really good to get in your inbox every morning, sort of a preview of what's to happen during the day and how to trade it. And all our content at stenoresearch.com. So go in there and check it out. Join our free newsletter or a free trial period for our premium content.
Yeah, and also worth mentioning that we obviously offer institutional packages as well via Bloomberg or your preferred software venue.
So, Andreas, should we get started with U.S. housing, perhaps?
Yeah,
I know you've looked over the past weeks, of course, a lot into liquidity trends at the moment. And this week we have some new numbers and some new trends in the housing market that might add some fuel to the fire. Should we start with the Freddie Mac case or the Freddie Mac proposal?
Mm-hmm. Well, we know that Freddie Mac basically put forward a suggestion on how to free up equity among households a few weeks back. And we know that the due date for the so-called question period ends the week that we've just entered when you listen to this podcast, probably. So it ends the 16th of May, meaning that we will likely get a conclusion on this suggestion already fairly soon. The whole idea here is that Freddie Mac, as well as a lot of others, they've obviously seen how a lot of people have been stuck with so-called golden handcuffs in their current mortgage. They took a mortgage while rates were a lot lower than today, meaning that they have likely a lot of equity in basically embedded in their home, but likely also an interest rate that they would like to keep, if you know what I mean, given what's been ongoing in interest rate space, say, over the past 3 years. Point being here that Freddie Mac can actually free up this embedded equity in the household sector by allowing the mortgage holders to use the secondary market, basically. So that's the simple explanation here, that they will allow homeowners to access their equity via a secondary market for mortgages.
And we have had some indications as to how big this pool of liquidity might be.
Yeah, well, I mean, if you look at the overall equity embedded in house prices minus the mortgage loans, we're talking trillions. Latest estimates point towards 15, 16 trillion thereabout. I mean, this is obviously the biggest asset market in the world. And I mean, of course, you will not free up that equity overnight, and it's not feasible that it will be freed up. But say that we utilize this 1%, 2%, 3%, whatever, of this pool of embedded equity. That's a pretty decent loan for consumption, right?
Absolutely.
Isn't it? So the whole point here is that, first of all, the timing is very interesting from Freddie Mac on this. Given that it's an election year, given that it arrives basically in conjunction with the San Francisco Fed telling us that the excess savings pool is gone in U.S. households. I, by the way, don't buy that. But if you look at that study, by the way, it's been cited in various media outlets over the course of the past 2-3 years. It's a methodology developed on the back of the pandemic where they try to measure the excess savings since 2020 by looking at savings rates relative to what they were ahead of the pandemic, and then try to aggregate that. And savings rates were through the roof while we received checks directly with postal mail. Point being here that if you use the same methodology in Europe, that savings pool has moved nowhere since 21, and it's still sort of flatlining. I don't really buy that U.S. consumers are eating into their savings day in and day out without the same thing happening in Europe. So I think something is flawed with this methodology. That was just a point to mention after this was basically shown in headlines in various media outlets over the past few weeks. Back to the Freddie Mac proposal. If there is some truth to this story that the excess savings are gone, this is obviously the perfect tool to replace that, given the amount of embedded equity in the U.S. housing market. So what I'm trying to say here is that this is a potential add-on to the current risk party. We've thankfully timed this risk party pretty well. Now that we know that liquidity trends will improve post the tax season. April was bad for a lot of reasons, but one of the clear reasons why April was bad was the liquidity drawdown due to the tax season. That's now behind us. We know that the Treasury General account will release some dollars to the system, so I'm fairly upbeat here.
Yeah,
as you can hear.
This is potentially a big pile of money just waiting to be punctured and let loose in the markets, basically. And why should the Biden administration let the Trump, perhaps the potential upcoming Trump administration, be the ones to access this pile of money? That's a simple way of looking at it. While we're at that, should we take this week's clip?
Yes.
From YouTube. I mean, we've been talking a lot about Donald Trump. We've been talking about the hush money trial. Obviously, this week we had Stormy Daniels' testimonial. Not too many news in there. I was a little bit puzzled as to why she needed to be to give a testimony in this. I mean, it's not a case about her doing anything or anything being done to her, but obviously she's a part of it. We don't have any recordings from the process in the court, but let's just have a small clip of what she said on the Jimmy Kimmel show a few years back.
Door to the hotel opens, and what is Donald Trump wearing?
Silky pajamas.
And they were black pajamas,
Yes.
right? Yeah. So he immediately looks like a Halloween pumpkin or something.
I'm pretty sure I thought he was channeling Hugh Hefner.
Ah, Hugh Hefner, right. You mentioned that.
Significantly less sexy.
You made him change, right?
Yeah.
Yeah,
you made him change? Yeah.
You made him change. He did change.
Yes.
I wish you could make him change now.
He followed orders much better back then.
I don't know. I think maybe you could still order him around a little bit. And,
I'd have to speak in Russian, though.
You guys had dinner.
Yeah, so a little clip of the Jimmy Kimmel show. Obviously, really entertaining stuff. This, I mean, as we talked about earlier, Andreas, no matter which presidential candidate would be, other than Trump, would be exposed to this, it would be a complete meltdown of their campaign, but not for Trump. I mean, His voters, his supporters, they already know this. They see it as a strength that he has been fooling around with a girl like Stormy Daniels, I think. Even the so-called Forbes magazine gate, apparently Stormy Daniels was, let's say, utilizing his Forbes magazine in various ways. Donald Trump doesn't really seem to hurt his macho image as well. He is really the new Teflon candidate.
So she spanked Donald Trump with the Forbes magazine.
That's what I was trying to say. I'm not sure if it was a Trump magazine. There are some debates to that, but let's leave it at that. Anyway, the debate, the campaign is ongoing. This is the level. This is what we're going to get used to. Going to be hearing even more of. Still, Trump is looking relatively solid in most polls. Biden has made up some ground since the State of the Union, but Trump's still looking relatively solid. And actually, if I had to bet, I think the Biden campaign is more worried about this hush money trial than the Trump campaign, actually.
And this is the only trial that we'll see ahead of the election, right?
Absolutely.
No risk of the others.
No,
not
really.
being put forward.
No. At least not concluded before the election. No. So we will potentially have a president going in with several indictments hanging over his head. But I mean, people know that, and they are most likely going to vote for him. A lot of them, anyway. Just a little intermezzo. Always good to have the Trump clip of the week, Andreas. Should we talk a little bit about the dollar?
Yeah. I mean, one thing to mention as well is you look at the Truth stock price, Donald Trump's media company. And
I mean,
it seems like the mere exposure from this trial is positive for his business for some reason. And I mean, well, I guess it's good old marketing discussion. Whether is it good news to just be in the headlines, no matter the reason why you're in the headlines. Apparently, it is. I mean, it's at least it's not bad news.
It's free exposure. That's basically how Trump built his first campaign. He is obviously spending a lot of money also, but this is basically free exposure, free name recognition. And I mean, if you don't like him, you don't like him. This is not going to change that.
No.
So the US dollar, back to markets here, Andreas. The US dollar has been weakening over the past week after some stronger weeks. Is this a result of Jay Powell's speak last week, or what are we seeing?
Yeah, I mean, it's kind of a mixed picture, right? Because we see trends pointing up again in the dollar versus some of the major Asian currencies. Quite interestingly, the attempts to try and sort of contain the pressures in Asia, they've proven to be very short-lived. The Japanese authorities are now back to rhetorical intervention instead of actual market intervention. And I kind of struggle with the notion that Bank of Japan truly wants a weaker trend in the dollar versus the yen. My point here is that the Japanese inflation picture is probably stuck around a couple of percent right now. So more or less a target. But included in that 2% inflation that we're currently seeing in Japan, we have quite a decent imported inflation, right? And by admitting to current inflation trends being somewhat in line with the very, very slow but steady normalization policy path, Bank of Japan implicitly also says that, well, we're actually okay with the weakening trend of the Japanese yen as long as it's not too pacey, if you know what I mean. So I'm not sure that the dollar will weaken versus Asian FX. At least it looks tricky to bet on that right now. When we look at the dollar versus other peers, we have at least seen some signs of stabilization, maybe even signs of improving sentiment out of Europe. By the way, China is also doing pretty okay, except in currency terms. So what's striking here is that the dollar is, in my opinion, still relatively strong, despite a whole pamphlet of reasons to be negative on the dollar. The big deficit, the slightly better performance in fixed income space in dollars, which should be a headwind for the dollar, both due to the simple rates equation, but also due to rebalancing flows. But yet, it's not really weakening, is it? And my best guess is that it's not weakening because of no solution to the Middle East malaise yet, no solution to the Red Sea, um, no solution to the supply deficit in oil space. And therefore, I'd like your take after another week of no news, more or less. That's not true, because we had news back and forth, back and forth, back and
Yeah.
forth, but no solution
No.
in the Middle East. To me, it seems like that this can continue. And
Yeah, absolutely. Yeah. Let's just dive into that. I mean, last week I talked about. I think this week that we're ending now could be the one where Hamas signed the peace treaty in front of them. They did, but apparently Israel wasn't on board with this truce proposal in the first place. So I don't know why they even signed it. It's I did a whole video on this called Geoportfolio. You can look it up on YouTube for a deeper dive into this. But basically, Israel have now entered the city of Hamas in an offensive, the city of Rafah.
Yeah.
And once they've done this, it's very tricky to simply turn around and exit that city with the troops. So I think we're in for some more weeks, even though the pressure is immense on both Israel and Hamas. We've seen Netanyahu this week talk about, well, if the US is going to stop supplying us with missiles, we're going to fight this alone. And that is the increasingly the sentiment in Israel. They seem to care less and less about how much support they have in the West. They're going to do this by themselves. And that obviously means that the US has less control over Israel. Hamas, the same thing. They're under immense pressure from Saudi Arabia, Qatar, Egypt, all their Arab neighbors to sign this truce deal. They're under immense pressure to release more hostages to Israel. So right now we seem to be in a deadlock where neither side is really that focused on peace. They're relatively content with continuing the conflict. Israel for finishing the job, quote unquote. Hamas for playing the long game of eroding the Israeli support in the West.
Yeah. Speaking of this conflict, Mikkel, I think is it 5-6 days ago, we saw the headline that Joe Biden halted some exports of bombs created by Boeing. Obviously, you also mentioned Netanyahu's response to that. But I'd like to talk about the Boeing case as well, because it's of relevance to the US economy. I consider it a pretty decent risk scenario that Boeing defaults now. I mean, another week of trouble right, left, and center for Boeing. We obviously have these two whistleblowers no longer being with us. I don't have a clue about what's ongoing there, but it's at least fishy, to say it the least. And we've seen from the Chicago PMI that, I mean, the region with a lot of Boeing jobs suffers big time. Airbus is doing well amidst all of this. Their only true competitor, at least within the passenger plane or the passenger aviation industry. So Mikkel, when you look at Boeing as sort of a political instrument here, Boeing was heavily involved in the Nikki Haley campaign, as far as I'm concerned.
They were.
So where do they put their money now, if you know what I mean? Boeing is a big company.
Absolutely. What we saw this week was or the past week was the Indiana primaries. That was quite interesting to me, because we had a lot of Republican primaries which basically decide those elections, both for congressional seats and for the governorship, most likely. And a lot of them were pro-Israel and anti-Israel Republican candidates pitted against each other. And the pro-Israel candidates received huge funding from corporate America, it seems. So it seems like the pro-Israel lobby really drove out the big guns for this one, and they're going to do that for this entire election cycle. And I think we are also beginning to see the first signs of Donald Trump moving in that direction, more in the pro-Israel direction.
Okay.
We're yet to see. I mean, we had the clips a couple of weeks ago where he laughed at the Genocide Joe thing. So this is still really murky politically, but I think the Republican Party is moving towards a more pro-Israel stance, simply because that's where their campaigns are being funded. So we are seeing the muscles of the pro-Israel lobby in America being rolled out, while Netanyahu is putting the screw on the U.S. administration.
And there's obviously a direct link between Boeing and that
ongoing
crisis
that was
now.
my point, yeah.
But given the story that Joe Biden halted the exports of bombs, but there is also, of course, the the economic impact of Boeing locally.
yeah.
And I also want your take on that because, I mean, are we moving towards Boeing being an election topic here?
Yeah, absolutely, absolutely. It's so many jobs in so many critical states that this has to become a huge political topic, and has to be something that the Biden administration will have to consider some sort of, I don't know if a bailout could be relevant, but some sort of support mechanism to keep these jobs alive in some sort. They can't simply point to, oh, but they're going to be replaced by green jobs in the next 10, 20 years. That's not going to do it this close to an election.
No, I tend to agree, Mikkel. The question here is, this Boeing gate, was this a part of the reason why we saw such weak data figures in April? It does not make up the sort of entire story here of weakening data in April. But what we've noted, and which is the reason why we do daily nowcasting, is that some of the trends seen in the truck market, they've reversed into May again. So it was a weak April, in all fairness. We've seen a sharp reversal in a positive direction in the truck demand through the first weeks of May. When we look at congestion data, through the roof still, also in seasonally adjusted terms. So basically 5 to 10% up, depending whether you look at aviation numbers, truck congestion data, shipping congestion data, but it's up. So it's very hard to see that crisis mood that to some extent started spreading again in late April and early May. So we're back in positive territory. That's basically my point here when we look at it live. And that's why you need to look at things live, because otherwise you'll simply lack the market here. A lot of people got caught in negative storytelling after that April batch of weak numbers, but it doesn't really seem like it's feeding through to the overall corporate and household activity in the US, if you ask me. So ahead of next week, Mikkel, and big inflation week, I think we have the hottest inflation forecast in town. If you want the details, you obviously need to sign up to stenoresearch.com, and we now cast these things for institutional client space as well. But I've noted a couple of things. One thing relates to the housing market. When we look at live assessments of rents, also adjusted for seasonality, I know springtime is positive for rents overall. We could be talking about the hottest April, well, for quite a while. And that's, of course, the worst possible news for the Federal Reserve, because they keep referring to the housing market and rents as sort of a lagged effect in inflation that they can count on bringing inflation down over the next couple of quarters. Simple math, now that the rents picture basically adds almost 0.1 percentage point to the core inflation on the month, every year, every single month. Simple math puts you way above their September PCE forecast. So I feel fairly confident saying that the Fed is completely off on housing inflation. And one member of the committee at the Federal Reserve basically started, I think debating this is the right word, Neil Kaskari, by writing a blog on the Minnesota Fed page discussing whether this is an economic repercussion of the immigration.
Yeah.
And quite interestingly, I mean, we have a couple of countries worth looking at for anecdotal evidence in relation to that discussion. One being just a bridge away from us, Mikkel, in Sweden. Another being Canada. Both countries have received massive inflows of immigrants, say, basically on a trend basis, but also extreme numbers over the past few years. And they have clear struggles in terms of balancing the real estate markets at both places. So, I mean, given high interest rates, given high inflation and necessities, Mikkel, and given that you can now make a direct link between immigration and this inflation, this got to be the hottest topic
Absolutely.
politically ahead of this election.
Yeah. It should be. It
Yeah.
should be. Absolutely.
Yeah.
I don't think that link has been or that connection has been made in very many people's minds. But it's reaching a level where it has these economic effects, and that's extremely interesting.
Yeah.
Extremely interesting. We're going to cover that in future episodes as well. I think we could dive more into that with more countries.
Yeah.
Because
But the issue here is, we, I mean, it seems hilarious. We obviously inhabit a small country, very digitized, so we quote unquote know how many people we are.
Yeah, that's true.
They don't have a fucking clue in the US. I mean that's the
It's a
honest
whole other
answer, right?
ballgame, yeah. And it's all
Because of the sheer size of it. But
it's
I
an
mean,
entirely different type of immigration in the US
Yeah.
as well. Much more broad, yeah. Very, very interesting. Andreas, before we get to the portfolio update and how to trade all this that we've been talking about, I just want to touch on a question we've been getting from viewers. And I want to take this opportunity also to suggest that you listeners send us your questions. You can either go into our YouTube channel and post them in the comments. You can go to our website and find our email address. Go to stenoresearch.com, find our email address, and send us some questions. We'll be happy to take those up. One I got this week that we can answer pretty quickly is that Xi Jinping went on a European tour this week. He hosted Olaf Scholz a couple of weeks back. And the question was simply, why did he go to these three countries, France, Hungary, and Serbia? It seems like quite a strange chain of countries. Well, basically, the answer is this. France is the country that was worth his time to go to. He spoke to the leader of Europe, Emmanuel Macron, basically. Hungary and Serbia are the only two countries who really want to talk to him, on a friendly basis. He doesn't get any critical questions about Xinjiang and whatnot. He doesn't get that at Macron because they're talking geopolitics. If he had gone to like Copenhagen or Madrid or what, he would have gotten all sort of annoying questions. He doesn't get that in neither Budapest nor Belgrade. So those are his friendly visits. Macron was the real visit. What I took from this European trip is that we are seeing a clear sort of a four-way game here. The US and Europe is trying to drive a wedge in between China and Russia on Ukraine. They're trying to get Xi on his upcoming meeting with Putin to put the screws on Putin, to put Putin in his place or make him negotiate on Ukraine. So that's what Macron and Biden is trying to do. On the other hand, Xi is trying to drive a wedge in between the US and Europe on trade. Because while the US, and perhaps increasingly so, giving some of the news today about Biden's considering increased tariffs from Chinese EVs, it seems that the US is moving towards decoupling from China much faster than Europe is. So we're going to end up in a situation where the US-Chinese trade is significantly smaller, and European-Chinese trade could still be relatively big because we're still very reliant on all these Chinese products.
It's not a coincidence that Powell airs this story on tariffs while we've been stuck in a discussion on the devaluation risk of the yuan over the past few weeks.
Exactly.
I guess that's timed pretty neatly, at least.
Saber rattling.
Yeah, more or less. My best guess would be that Biden would be much more reluctant to like do these tit for tat responses to a devaluation. I mean, Trump is the kind of guy who's like, okay, you devalue 10%. Here's a 10% tariff, right? One equals one, right?
Yeah.
But the question is whether China dares to take the risk here. I was pretty certain around that a few weeks ago. I'd like your take on it as well, Mikkel. But this devaluation risk makes a ton of sense to me. First of all, because I mean, their export numbers are pretty decent from China right now, but they're not making any money on their exports.
No.
So I mean, it's easy to sell a product if you don't want to earn anything, right? I mean, they're basically just subsidizing their way out of the malaise, right? But ultimately, you want your private market to gain some margins, right? And one way of obtaining some margins in the export space would simply be to devalue the currency, right?
Yeah.
It works at least short term.
Yeah. And if you just look at the EV market, I mean, you could argue that the Chinese are simply responding to Tesla's price cuts last week, or
last year.
Last year, exactly. And then let's see who has the biggest pockets. I mean, perhaps Tesla are the ones feeding this idea into Joe Biden, because a tariff on Chinese EVs would be incredibly positive news for Tesla.
Yeah.
So I don't know. This is a very big strategic game. One thing we can be certain of is that Europe is not playing that strategic game at all. we're not playing that game, and we're simply trying to get the best goods from from either side and making our way here. So Andreas, let's sum all this up in our portfolio update. I know we're recording this Friday afternoon. I just heard around the office that we're concluding some trades. I don't know if you can. This is obviously only going to get published on Sunday, so we have some days to react to that. Could you just give us an update on what's going on?
So the short version here is that this setback we saw through April, we consider that temporary. We also timed a few exits very well through April as we forecasted that weakness in liquidity. We now see an improving liquidity picture in May. We're not talking about the liquidity picture that is through the roof, but it's improving. That paired with a much better real-time data set on the actual manufacturing activity that matters, congestion-based truck demand, congestion-based shipping demand, all that basically points towards a rebound. And I think numbers will look much better for May than they did for April. Given that a lot of people took off their quote-unquote reflation bets towards the end of April, I actually consider the timing pretty good to enter some of those again. One simple way of expressing reflation is via energy commodities, right? Another simple expression of a reflation trade would be trading some of the cyclical equity markets. I consider the technical break in the FTSE, the UKX, in the UK very interesting. We're basically adding to that reflation story again. It also rhymes with a decently hot inflation report from the US, at least as long as Jay Powell and his ilk will continue to say that, well, fair enough, inflation is probably reaccelerating a little bit. We're not going to hike in an election year, forget it.
I agree completely.
Yeah.
Very interesting, Andreas. Anything else on your radar we need to be covering?
No, I mean, given my sore throat, I think people are probably tired of listening to me by now. So I promise to sound much more relaxed next week. As I'll be broadcasting from Corfu, I think it's called in Greece.
Mamma Mia country down there. Almost. Small Greek island. Sounds really nice.
Exactly. But make sure to call me. I mean, I typically get a lot of opinions when I'm sitting by a swimming pool. So
get a lot of good ideas and some bad ones as well.
Yeah.
I have a feeling, Andreas, that we're going to be talking about freight rates next week.
Yeah, sure.
But let's leave it at that.
They're on the up.
Yeah, exactly. Let's leave it at that. Thanks a lot thanks a lot to you for joining, and thanks a lot to all of you for listening, whether on podcast or on YouTube. We'll be back next week.